This is one of those things you need to find like a perfect balance before you sit down and get ready to do one of these podcasts. Last week, 2 hours and 45 minutes, something like that.
Yeah.
You have to be ready. You don't just have to have notes ready, water ready. You have to have peed, use the facilities. This is a whole... Finding homeostasis when you're about to deliver a podcast this long is not... It's not as easy as you might think. You could find yourself halfway through earnings with your knees crossed quite tightly while you're trying to...
Oh, you find yourself in that situation?
No, I
often?
don't.
No, you don't.
Because I prepare.
Right.
That's how we've got this far without me, having any accidental edits that need to be removed from said podcast because I didn't prepare. So I do.
That's right.
So I'm here and I'm ready to go. I found that homeostasis I was talking about.
Yeah. You found it, right? That's
time
good.
to rock and roll.
It's hard to find.
Is it?
I think it might be.
I don't know. I seem to get in the zone pretty easy.
You do.
Yeah. I find the zone. I'm at home in the zone. How was your week?
Oh, it was good.
Nobody's been in the hospital this week?
No.
We're a couple of weeks removed from any hospital visits.
Yes.
For at least the two of us.
For sure, yeah.
For at least the two of us.
I think it's 2 weeks without a hazard or incident.
Yeah, but your week otherwise.
Pretty good. How's yours?
It was good. Yeah, it's beautiful outside.
Oh, it is.
We had an extended winter, and now we're basking in an early summer.
It's so green
warm.
outside.
It's gorgeous.
Yeah, it is. It is.
And it seems to be gorgeous the most on the weekends. This is 2 weekends in a row where it's just been phenomenal on the weekends. So I'm going to take that and run as we do cardio outside anyways now.
Exactly, yes.
The snow's gone. The market's had a decent week. It's shining on a market that...
That's right. The markets were pretty green, huh?
Yeah, absolutely, right?
Yeah,
I mean, the rub from the economy should be giving the markets a nice boost. We've got excellent earnings. We've talked about...
That's right, yes.
We talked about the earnings last week and how good they were, and they definitely... While it's not completely done yet, we've got a couple of companies next week. It's mostly finished. The S&P 500, 90%, I believe, reported. Some of the best earnings in 20 years. So, I mean, it's really difficult to be able to argue with things. So, everything going well. Things are going well with us. The podcast, I'm going to let you handle the duties of running this podcast because you just look like a man of high esteem and standards. So I'm going to assume that you're going to lead us to the promised land, the next level. You're a king among men. Sir, I bow to you. The floor is yours.
Thank you.
Continue.
Well, yeah, as you said, the markets did pretty good this week. So how green were they? Were they blossoming? Anything to talk about?
They were good. Everything up over 2% except for the TSX, the Dow 24,831 to close the week, up 2.3%. S&P 500 2727 up 2.4%. Nasdaq 7402 firmly above that 7,000 mark now, up 2.7%. Like I said, the TSX up about 1.4, 1.5%, somewhere in that neighborhood. 15,983 closed the week at. We're looking at good numbers. I mean,
they all look pretty good.
I don't have a problem with what's going on. The earnings that keep coming in keep reaffirming that everything's headed in the right direction. The global economic picture says everything's headed in the right direction because it's not just the United States where things are doing well. It's doing well
globally
around the world where we're having a lot of different sectors seem to be blossoming in a lot of different areas, and we're having economic growth. We're having historical low unemployment levels in a lot of places. This isn't just happening in the United States. While in the United States, it's obviously the most brazen because the economy that we're going to follow, and it's definitely the economy that leads the way, despite how big other economies are. People are watching the U.S. economy as definitely a barometer for how things are doing globally. But the U.S. isn't the only country where things are doing phenomenal. The markets are responding that way. Pretty much every company nowadays is got to be considered, at least to some extent, a global company. I mean, maybe you're not shipping lumber from Home Depot, like to the depths of Africa, but you're still running HomeDepot.com that could be sending a drill or something to the depths of Africa.
That's right.
You know what I mean? So while you're not touching it on every level, every company basically is an international, global company nowadays, and things are doing phenomenal. Things are doing phenomenal around the world, doing phenomenal in the marketplace. Price to earnings historically a little bit high in some areas, but it doesn't seem to be bothering people too much. And we do see a lot of sectors that were up a lot in 2017, being the sectors that still aren't really pushing out this year as phenomenally, right? Like you're still seeing a bit of balance from what we had last year, where there were certain sectors that were outpacing a 20+% gain in the S&P and the Dow.
There was a few of them.
There were some sectors that were, like still in the much higher, and they're being much more tempered this year, which is understandable because you're going to get a little bit of balance, because it's not just one thing that's doing well, it's actually just everything that's doing well, right? So over on the commodity side, gold up a little, 13.20. Oil, I mean, do we talk everything oil now? Like,
Surely, yeah.
Right? Like, so, okay, 70 a barrel is what it closed at WTI. Oil's over $70 a barrel for the first time since November of 2014. That happened on Monday. We're sitting at this. We see this Iran nuclear deal coming apart with the United States pulling out of that. Iran's oil obviously coming off the marketplace. OPEC saying that they have they have the volume right now to make up any demand but OPEC's a cartel. I mean, how do you trust OPEC? They've got countries that are so corrupt, like Venezuela and stuff involved, and Russia's the other major supplier out there, other than basically the Western Hemisphere here.
Basically, I just have to take them at face value.
Face value with OPEC sounds like a phenomenal idea. You've got Venezuela facing sanctions from the United States. Venezuela and like 20 companies get sanctioned this week because of this President Maduro that's in power there. The U.S. government trying to stop Venezuela from having what they're calling like a sham election coming up here in May. This guy is, apparently. And I mean, a lot of your oil coming out of places like Venezuela and a part of OPEC, right? So this oil situation, you talk about like the Permian Basin. Apparently what we're hearing out of the Permian Basin is that the actual oil coming out of there, which is U.S., we're exporting this, or why we're exporting this when our retail prices are so off the charts. Like, retail could come back to earth. Last time the retail prices were near this high, the price per barrel was well over $100. So right now to see retail prices comparable to what prices were, 3-4 years ago, and you look at the price per barrel still around $70, it doesn't make a lot of sense either.
There's no correlation.
None whatsoever. And when you talk about the U.S. being like at the top of their exporting highs for all time right now, the Permian Basin has so much oil coming out of it, they're selling for less than $60 a barrel because production is overwhelming the actual capacity. They can't hold on to it. There's no pipeline capacity. So there's oil out there. So taking Iran out of the oil supply is not going to do anything but hurt Iran. And then you see Iran bounce back from these sanctions, despite other countries that were involved in this Iran nuclear pact not wanting the U.S. to step out. We heard a representative from the United Kingdom earlier this week before he stepped out, really pleading with him to think it through, right? But it was something where the president, he's pretty steadfast. When he doesn't like something, he's going to make
up his mind.
He's going to make a move on it. So Iran nuclear deal moves basically in the rearview mirror. The oil from Iran off the market as sanctions through the roof, because they said they're going to hit them with, like the highest economic sanctions that they can, whatever that ends up meaning. The United States isn't playing because obviously Iran wasn't listening to this nuclear pact. And that's kind of what we're hearing through news sources is that there was potentially, they were still proliferating the weaponization of nuclear arms, despite the fact that they weren't supposed to be. They were being allowed back into the actual marketplace so that they could, they could take part in prosperity, and hopefully that would take their mind off of doing nefarious deeds.
It doesn't look like it did, though.
They come out of this nuclear pact as the United States pulls out, and the very next day they go over and Iranian forces in Syria attack some targets in Israel. Israel fires back, and of course Israel comes out and says, you obviously see the real Iran here based on their behavior. Less than 24 hours later, the price of oil, how it's tethered to all this, I don't think we really know. I don't think anybody really knows how the price of oil is tethered to all the bureaucracy around the world and all the different people that control oil at so many different levels.
It's a guessing game.
Yeah, it's totally a guessing game, right? It's not something where you're just going to be able to say, oil's this because of this.
For sure, yeah. There's no definitive answer. Really.
There isn't. There's so many multiple factors involved. But oil, 70, like we're saying, it's hitting highs. And where could it go? I heard a thing where an analyst was talking earlier in the week about oil potentially hitting $100 a barrel. So, like, I don't know if oil goes to $100 a barrel. Do you think there's that much global unrest in the actual oil market?
No, I don't think so. I don't think it should ever hit $100 a barrel. That's crazy high. Even where it is right now, I think that's a little too high.
Yeah, I don't. $100 a barrel seems like it seems ridiculous when you consider the amount of output that countries like the United States have. I mean, Canada here, we don't even seem to have the valves turned on. That oil's there and it's not even pumping out. So I mean, the idea that things should be that high around the world when it's just a matter of turning on the tap seems a little ridiculous. But as of right now, oil continues to climb in the market, really unstable.
We seem to pay for it.
All these deals continue to fall apart, right? And I don't think it's actually a problem. I think the United States needs to take all these economic stands on a lot of these different topics and really right a lot of wrongs. And, you know, President Trump is very adamant about the fact that this Iran nuclear deal signed in by the Obama administration was wrong. It was a mistake to sign this deal. And they were giving Iran far too much that they hadn't earned. And I think now taking it back is the right move, but it adds a lot of uncertainty to certain marketplaces. Oil being one of them. Bitcoin, you want to talk uncertainty?
Yes, let's talk uncertainty.
Do you want to talk some uncertainty?
Yes.
Up and down, right?
It has been, yes. It just dropped down recently.
Almost to 10 grand earlier this week. Right now, 86.20. Bill Gates came out early this week. Said it was as an asset class. If he'd short it if there was an easy way to do it.
Yeah.
So Bill Gates coming out and making a pretty brazen statement about shorting an asset. I mean, that's not even really his bread and butter, right? Like, he's not someone who comes out and makes a lot of statements about investments.
No, he's not.
He's someone. I mean, now it's basically all philanthropic endeavors. It's not even a matter of Bill Gates coming out and making statements about even Microsoft. Right, what you're going to get basically is Bill just talking about the Bill and Melinda Gates Foundation, what they're doing as far as, you know, like trying to better the world. So for him to come out and make a statement like that makes me kind of sit up and take notice and think like, wow, like for him to do that sounds like he's trying to get your attention and say like, are you paying attention to this? Like, even I think this is ridiculous. And I'm not someone to really call a lot of things out. Don't like to ruffle a lot of feathers. Warren Buffett, again, they've made comments. We've heard over at Berkshire made comments about Bitcoin. Said it was rat poison squared. I'm not entirely sure what he means by that. Maybe it's
some
just
old term lingo then.
Definitively worse than rat poison. Maybe is what he was trying to get to. That it's just
poison stock. Maybe
it's an absolute poor investment. Is what I've always taken it as. The people who try to give it this store of value label, much like gold. I see Novartis came out and was talking about his little investment with cryptos that he's working on and stuff like that. And I like him. He's a smart guy. I mean, runs $1 billion hedge fund for a reason, but it's just, to me, I don't see the same things that a lot of these guys. But again, he's a guy who, when I heard the interview said he bought it at $98 or $96 and then started to sell pieces off sometime last year when it hit like 11 or 12 grand and sold it all the way up to, you know, like 16, 17,000. So yeah, you bought it at $98. Of course, you've got a real affinity for this thing
because it's made you dough.
Because you've made so much cash off it. So are these other guys just mad because they're late to the party or they never made it to the party? I don't think so, because I don't see the relevance of Bitcoin as a store of value. Because why? What designates it as that other than people just hoping for it to be that?
Nothing. It's not tangible.
Nothing.
Can't see it ever working.
That's my huge issue, is the nothing. They want it to be this, but why? Like, why should this thing just be allowed to be something? Because like a bunch of people are like stomping their feet saying like, this should be recognized as that. It's like, yeah, but
we're acting like a child.
You're like a bit of a
anywhere.
petulant child. You don't really have anything that like you're convincing me on. It just looks like a number that moves around. It doesn't look like anything that actually.
Nobody's really taking it on as
the impact is because the media follows it. We follow it. I think that's where the major part of the impact happens.
We have an established currency, and I think we should just continue down that road because it works, and not try to add something new in that's just gonna fall apart.
Yeah, muddy the waters for no reason.
There's what, 24 million?
There's always human intervention. You hear the EU came out. I seen the EU talking last week. A major representative from over there, and they were saying that, you know, the exact same process that you worked for the United States worked over there. It took longer for a lot of places, but the quantitative easing process worked over there. That is definitely human hand intervention to make sure an economy can slowly regather their footing, bring interest rates down, help lending out, and bring economies up from the absolute ground floor up. Whereas, like this is a lot more intangible, no human hand interaction. When the money's there, it's there. Whoever it goes to is who it goes to. And I think, like we've spoke about this before, this seems like the much more linear path to disparity between the rich and the poor, because eventually with no more money added to the monetary system, there becomes a real disparity choke point where, like, I don't have to do nothing for you to get you to have to do everything for me because I have everything and you have nothing. You know what I mean? And when you have human intervention, every time there seems to be, and I know you can't fix major disparity between lower and middle classes, but at least you have the ability to try to make things better. Like, you look at what we've done over the past 8-9 years in the United States. I say we, like I'm a citizen of the US. Like I'm doing this, right? Like I say
yeah,
we, but
I've lived this.
Yeah, I'm doing, you're welcome. But you see what they've done, and they've been able to make unemployment low enough that people all of a sudden have options.
And they're doing a great job.
But if you weren't able to stimulate the economy because of human intervention, you wouldn't have been able to get these small little snowballs rolling downhill that eventually become big enough to help tilt things to your advantage again when you've got a set amount of currency that's doesn't change around except for the amount that's already in the system, and there's no human hands to help inflation. This, I don't think, is a helpful idea as far as anything more than it's novel. It's very novel.
Yeah,
the blockchain thing,
yeah.
I hear a lot of good things where people feel like they're going to be able to implement blockchain technology to in no regards. Again, talking about like a banking system. JP Morgan Chase's the Singapore office, their London office, and their New York office at the end of a banking day needs to shore up. Everybody needs to balance out. Right now, you currently use a Swiss system to go ahead and balance everything. With the blockchain technology, everything's in the system already. With the one press of the button, you would tally it, and he did that exact noise. When he did it, I visualized what he meant, where everything, that in and of itself is something that you're going to be able to utilize. But the Bitcoin part of the blockchain, those two things are vastly separate, and I think people are going to find, obviously, that the blockchain technology becomes more and more useful in a way to condense and organize and transfer secure information, as opposed to Bitcoin that really needs to find like a foothold in popular culture. One a lot more difficult than the other, personally, because I think the one is actually tangibly useful and the other one seems to hinge predominantly on fanfare, and that's not a good way to really sell me a store of value. I don't think gold works off its fanfare just because it looks sweet if you get yourself a fat grill. Right. I don't think that's necessarily why. Anyways, moving on in commodities, lumber.
This is kind of interesting.
We want to talk global economic expansion, lumber. So there's so much prosperity around that lumber, which is a big business up here in Canada, right?
One of our biggest.
Yeah, in the province of British Columbia, a very, very large business. The price of lumber futures has soared recently because the demand is so high and they're trying to put it out. But you know as well as I do that basically around the world, any established country, there's so much red tape on being able to just clear cut lumber nowadays.
There is.
You're not able to just go out and just decimate stuff, even when demand's up and you could make more money. So there's a lot of red tape. So lumber's going through somewhat of a super cycle right now. Increased demand, like I said, results in prices for the futures increasing dramatically. 30% they're up in 2018 and as much as 60% year over year for future contracts of lumber. Currently, July delivery sits at around $600. Lumber, because you got to build those ghost cities in China, right?
Yes,
they got their own lumber business over there.
Oh, I'm sure. I'm pretty sure that's a lot of concrete they use out there.
They got a big lumber business in China.
I don't remember any skyscrapers made out of lumber.
No, but houses, right?
Oh no, for sure.
So when you're building ghost cities, you got to build ghost houses.
Oh, you're
not just building the skyscrapers.
Ghost garages.
Ghost people got to live somewhere, right?
Exactly.
Ghost Costco,
ghost shops,
like a little ghost rub and tug, or who knows? You got to go somewhere, right?
Yeah.
Got to go somewhere. So that's the markets. Things are looking good. Everything seems to be relatively normal, save for this lumber topic, which I think is interesting. Something to definitely keep an eye on as inflation continues to rise.
Super cycle.
Yeah, the price of lumber, right? That's inflation right there. You're looking at it.
You are, yeah, definitely.
Oil. We're going to keep our eye on oil. As far as the markets go, I still expect what I expected. I think we talked about this in our first podcast of the year. I expect the up and downs this year. I don't expect a lot of steady growth going up, no matter how
2017 was great, huh?
Yeah. You're going to have to pick the winners. So the market's, while good this week, what's to come next week, I'm not here to predict, but I don't think we're going to see a lot more of there's not going to be a whole lot of taking off.
Right. It's going to find its ground for a bit.
And it is, right?
For sure.
It is, right? We've had people talked about, January, things were this and da-da-da.
Oh,
and it
yeah.
was
They're
down,
freaking out there,
and things are almost pretty much back to where they were. Yeah. And if you were really looking for certain stuff, there's lots of stuff that's up lots.
It's just the ebb and
flow. We were just looking at the index. But there's been a lot of adjustment where certain things that were well oversold have found their ways back up well more than the couple percent that we've seen the actual indexes change over all the last 5 or 6 months, right?
Right. Let's move on to economy here. Let's talk about NAFTA. Are we any closer to getting that signed here?
It's,
because this has been going on for quite some time, so.
I don't know. I think it needs to be.
For sure.
Speaker of the House, Paul Ryan, said that if they want it done this year, like if they want Congress to get NAFTA done this year, they need it by the 17th of May. So, is it going to get done? It should. These autos apparently are holding some stuff up.
So they gave it a deadline.
Some stuff Congress apparently has given the negotiators a deadline saying if you want it done. The U.S. wants out. The U.S. one of the main points, other than like a lot of the autos, like we've talked about, and the major disparity in wages across a lot of sectors, where it's way cheaper to employ someone in Mexico than it is in Canada in the exact same industry. So it causes people to want to then obviously use Mexico as opposed to Canada. So they want certain industries that are in these agreements to have wage a lot more parity. They're not saying, I don't think, specifics. You have to pay someone specifically this, but based on your economy and based on economies of scale in relation to the economies in the NAFTA.
Guideline kind of thing.
They want you to not be able to pay one guy in Mexico $3 to do a job that Canadian and American guys get $35 for, because then the jobs go to Mexico doing this stuff, and it's just not fair across the board.
For sure, yeah.
Right? So if you want free trade with us, it has to be free trade on all levels, including the actual employment standards that you have for your country and your employees, as opposed to a lot of countries like Canada and the U.S. have a lot more standards. So there's a lot of negotiation when it comes to this kind of stuff. But the U.S. wants out. They want this sunset clause. They want to be able to kill this agreement after 5 years. We know that they don't want to be a part of this. I think they're going to re-sign this. I would imagine they will, to try to. They're not trying to cut everybody's throat right away. Like, you notice how they make these demands with China, and then they back off. They make the demands with Rusal over in Russia, and now they've given Rusal a bit of an extended ability. There's a moratorium on all these, like tariffs or whatever, embargoes, whatever you want to call them, on their ability to actually do business. So what the U.S. is trying to do is they want to give all these people the opportunity to come to the negotiating table. NAFTA, especially Canada, is one of the United States', if not the United States' biggest allies because of proximity. They don't want to just kick us out into the snow, no pun intended for where we live. They want to make this work, but they also want to separate themselves from a lot of these deals where they're tethered to other countries and feel that they have to make concessions to make it right for everyone, as opposed to making it right for America first. So will NAFTA get redone? Probably. Will they put this escape clause in it? Yeah. Will they use it at some point if the Republicans stay in power through another term? I almost guarantee they're going to step out of this NAFTA deal, just like they're trying to rewrite trade deals around the world with other allies of theirs that they have very good working relationships with, but it's time to get things fixed. NAFTA probably going to get done, I would imagine, this week. If Paul Ryan's deadlines he's putting out there are real steadfast deadlines, it's probably going to get done. But I don't think it'll be around for the foreseeable future. I think it'll be around for a couple more years,
And then
until everybody has a chance to say, like, you've all had a chance to join what's the global economy now.
Right.
Everything's available. I mean, North Korea is going to denuclearize their country.
apparently they are.
The world has moved to a much more global look. If you can't get with the program, you're probably going to have to answer to the fact that you'll fall into last place. I don't see why everyone needs to hold your hand anymore. All the options are available. Everything is out there. Every country has all the options. So you look at countries like Saudi Arabia. There's a lot of countries that are really trying to get with the program because they realize that, you know, global capitalism is. I mean, look at China. You trace China's democratic system, whatever you call it over there, or capitalistic beliefs back just 10 years, and you're going to see a vast difference in what it looked like 10 years ago compared to now. But China was one of those forward-thinking countries that were like, hey, we see this, the way the internet age is moving, it's bringing everyone together. We can't be closed off and not play. And I mean, they're having some issues, the intellectual properties and stuff, but they were smart enough to understand they needed to embrace the much more openness that the global economy in 2018 with
Adapt or die,
with
right?
the fact, yeah, we're all so attached nowadays. The idea that you live somewhere else in a couple of years is almost going to make no difference. Everything's going to be able to translate what you say to where I am, and there'll be no barriers to entry between you and me. So the deals need to be done on a much more case by case basis. The U.S. needs to stop carrying some weak sauce countries, and we need to stand on our own too in Canada.
We do.
So it wouldn't hurt us to start making a couple of strong-armed positions on how we think that we need to get over in a lot more favorable way for Canadians, but we're not willing to do that because we play too nice. So we're one of those countries that falls to the back, unfortunately. That seems to be the way it works, right? So that's NAFTA in a nutshell. There's no long-term answer for it. It's not going to be viable, but will it get done this time? Probably.
That'd be good to see that. Hopefully it gets done quick. What about this Trump and Big Pharma?
Yeah.
He came out this week and he was kind of
you want beef, right?
Yeah,
every week he doesn't play this, right? He just wants some beef with somebody. Somebody's not doing right by Trump, and he just comes out and he airs you out. Like, he doesn't, like, the beginning of the week was this Iran nuclear deal. Like, we just trickled that into the week, like, to start it off. Like, oh, he might leave this. Like, the term is coming up for him to renew the deal, and he just, no, and he just cuts it off. And then a couple days later, he's dealing with China, with NAFTA, with Russia, with Mueller over at the FBI, hassling his lawyer Cohen. He's dealing with still Stormy Daniels nonsense, potential Russian election collusion. He's dealing with so many things, and he'll just lump more stuff on because you know what? His campaign promise, one of his ones, was he was going to deal with this because there's major disparity as far as the actual international drug prices. And you know what it is that a lot of these major drug companies, and we talked about this earlier, me and you, there's a lot of major drug companies. They're American-based. They do their research and development in the United States. They go through the FDA approval process. They do all the FDA approval steps, which cost research and development departments. The operating expenses of these companies are in the billions of dollars to get the actual drugs to marketplace. It takes a decade. It is such an ordeal. And I mean, we need these pharmaceutical companies. The issue that we have is that when they price in all that R&D into the cost of the drugs, because they get FDA approval, a lot of them, especially a lot of American companies, and everything gets released in the U.S. first, and then gets titerated into the balance of international marketplaces. They price in all the R&D into the price in the U.S. That's the issue, is that they make things that in other countries, when you've priced out the research and development, because you've already got it priced into a different place, you've got it priced into the U.S. region, the place where things are released first, more times than not.
Cheaper other places.
So it's cheap. Well, it's not cheaper. It's the actual cost of manufacturing plus whatever,
True, right.
whatever feasible markup that they find to be like reasonable as far as everything being equal in comparison across the industry standard, right? But when you're pricing in the R&D, all of a sudden things can be quite different. There's a vast disparity now in what things cost. So you're pricing all this in, but you're pricing it into one market, not internationally across all markets as you launch, because you launch a lot of drugs at
Years
different
later,
times,
right.
yeah, in different.
They want the fastest
you want
turnover.
that money turned over
right.
now, and then there's a big disparity in what things are priced at. He also wants an accelerated process for more generics and biosimilars, so he doesn't want companies to have. But that really cuts into that R&D thing where like I do have a bit of an issue for this, right? Like you start cutting into being able to recoup R&D fees, but then you want my exclusivity for a drug that I created to be shortened and allow other people to make things that are exactly the same as what should in theory be my patent, right? I should own this. So I think you've got to pick one or the other. Like I think you've got to ask them to come to the table on evening the pricing structure. It shouldn't be such a disparity between you picking up something in the United Kingdom or in France that for a year costs you $90,000 for said cancer therapy, and it costs me $135,000 for said cancer therapy in the United States. Nothing different. Same packaging, same paper, same plant it was made in, same dose size, same quality control, same everything. That's not fair. So that I think needs to get figured out. The idea of accelerating things for generics is great because you obviously want more of certain stuff on a marketplace. I was watching actually, and I this actually just coming up in my head. I was watching a thing about the company that makes the EpiPen. It escapes my mind at the moment who it is. But what it costs to make the EpiPen is very, very low. The EpiPen used to, like, not very long ago, decade or so ago, cost like $57. Now the EpiPen costs $600. The cost to make the stuff in the EpiPen has not changed, but the company that makes it is the only company that makes it, and there's no generic for the EpiPen.
Right.
So they charge an exorbitant fee.
Whatever they feel like, basically.
Yeah, like whatever they can get away with, right? They've market tested enough to where people are willing to then stab them with their EpiPens in protest. And that's kind of the threshold that they've used in regards to where their pricing structure is, which seems just ridiculous to me.
Really does.
It really escapes me who it is that owns the EpiPen patent. But yeah, the people that are making the EpiPen are out there doing similar to what Trump's talking about. But I think he's a lot more worried about generics in the sense that there's a lot of drugs out there that treat really serious ill. Not that being allergic to bees, needing an EpiPen is not serious. But there's a lot more stuff out there that costs a lot more than $600 because your copay is going to pay for a lot of stuff. When you start getting into these things that cost $10,000 or $20,000, $100,000 a year for some sort of therapy for cancer to whatever it happens to be, that's the stuff where I understand where he wants generics available in the marketplace just to have some price competition. But I think if you fixed even the price disparity, I think you would see insurance companies and stuff. There would be so much money saved inside the borders of the U.S. that I think that you would probably see a lot more people saving money on more levels and people working with each other more because everybody wouldn't be trying to make up these numbers that they're not having to make up anywhere else in the world. You know what I mean? It's hard on everybody, and I think the pharmaceutical company is going to have to come to the table, the negotiate table, where Trump's probably just going to come for them, right? Like, do you think he's going to just sit on his hands? Do you think he came out and just like was like, this is what's going to happen? Like, I know he makes a lot of brazen comments, and I don't know what a third of what he says happens, but a third of what he says happens.
Still
so
a big chunk.
If he's looking at you and he's expecting you to do some jumping, I would assume there's at least going to be a little hopping involved.
Oh, right? Yeah, you're at least going to hop a few times.
Yeah, Big Pharma is going to have to figure this out because it's just not fair. And that's just not fair.
No.
And when you're making an example of China or anybody else, you have to make examples of companies in your own borders and say, you're doing stuff that's not fair either. What kind of hypocrite would I be if I said, like, this ain't fair over here, but back over here where you're waving an American flag, I guess, we'll call it all even.
Well, when you come to the playground, you have to play fair, right? Those are the rules.
Trump wants it to be even. I like the fact that he said going into the presidential election, he didn't like the pharmaceutical industry, that he thought some of this stuff was way out to lunch.
Little bit of
He was
hoo-hoo.
coming, yeah, it was way out to lunch. He was coming for
Yeah.
him, and he's coming for him. He's
Good.
going through a big list of asses that need to be kicked. It's a big list. It's
big list.
He's
It's like
not,
a scroll. I think.
He's working his way through
Mystic
it. So
scroll. Why don't you give us the rundown of the rest of the news that happened in the economy this week?
U.S. manufacturing is struggling to fill employment. So the Supply Management Spring 2018 Semi-Annual Economic Forecast, that is a mouthful,
That is, yeah.
said that 70% of U.S. manufacturers are struggling to fill employment. That's a good sign. They're struggling to fill it. Means that there's a lot of people out there that have options to work in different places. They're not able to get the actual quality of employment they want, which means wages are going to have to go up. And you know what? 53.3% of those surveyed said they have raised wages. Non-manufacturing has had 64.4% of those surveyed saying they're having difficulty filling positions, and 35.7% of those surveyed have also, in accordance with that difficulty, raised the wages, because you're going to have to pay. In an economy when people can bounce around between jobs and they have a choice to pick, they're going to go where either they're the most happy, that job is the most accommodating if you happen to have kids or whatever it is, medical condition, or the most pay. Right? When you have the choices, you're going to pick. And when we're looking at data out of the U.S., manufacturing and non-manufacturing jobs increasing pay and having more and more difficulty finding employees to fill employment positions, it's a good thing. I've heard more and more people are added back into the job market every week when we look at these numbers, like in a numbers game that we haven't seen in forever. Like X number of it's unbelievable. Not just the actual numbers of unemployment, but the actual numbers of people added back into the job pool that have been sitting on the sidelines that aren't counted into these statistics. We're seeing a lot of people finally seeing, like, I've been sitting here waiting for years with an excuse, and I don't want to do it, and I don't care, and everything looks difficult. And now even people like that, and no offense if you've been sitting on the sidelines, are people starting to say, you know what, it's starting to sound a little too good.
Yeah.
I think I might even be able to make a go of it. If I could just motivate myself and get moving in a direction, I think opportunity's even there for me. When you can convince people from the sidelines to get back in the game, that's way different than the people that are just swirling around. The ones in the bowl that haven't been flushed yet, they're still trying to find their way out. But the ones already flushed, if they're climbing back up the pipes, trying to get
opportunities
I'm
out
telling
there.
you, man, there's
It's out
opportunities out there. So the wages are going up, and it's tough to fill employment. That's a good sign. Fed Chair Jerome Powell over in Zurich, Switzerland, said that the normalization of monetary policies in advanced economies should continue to prove manageable. I would probably happen to agree. I mean, I don't really see how that couldn't be the truth. We've seen historical lows in interest rates across the board in all major economies. Major economies, Japan, the United Kingdom, Germany, Canada, the United States. Everybody's starting to trickle back into the right direction. We're seeing interest rates slowly I know the UK held off on an interest rate hike this past week. We're seeing interest rates slowly starting to trickle back up, with the U.S. basically leading the way. They're leading the way in this coming out of the historical norms that we've seen over the past decade or so. But I would agree with Jerome Powell that if we keep an eye on what's going on and we don't rush anything, which none of these economies that I'm watching so far have been rushing anything. They've been taking the exact amount of time I expected them to take. They're looking at the core CPI numbers, they're looking at inflation numbers to make sure that everything's going the way that they expect things need to be going in the actual economy. They're looking at all this employment statistics. They're looking at marketplaces, at the stock market, to see how everything's going, to see where sentiment's at. Everything is going according to plan. I don't think that any of these guys that are controlling monetary policy in any of these major countries are in the mindset that rushing anything is the right thing, because we have a decade now in our rearview mirror of no rushing, of things being very stabilized, very low, but very stabilized because they need to be.
Yeah.
We can't rush now up because we're feeling
Everything's good. Everything's good.
Everything's been good for a while. Let's just take it baby steps.
Yes.
So Jerome Powell,
Enjoy it.
Yeah, I would double down on his sentiments that all these economies that are doing well, that are expected to be raising interest rates over time, are probably going to, in accordance with how their economy is doing in relation to the rest of the global economy, and things are going to happen in due process. Job openings, 6.55 million versus 6.1 million consensus, so there's more jobs out there, just in case you weren't satisfied with all the job data out there that's positive.
There's some more.
There's more positive job data. Redbook chain store sales beating estimates quite a bit, up 4.2% week over week compared to 3.5% last week. Mortgage apps down again across the board. Composite index, purchasing index, refinance index, all down, all nominal. 30-year down like 20 basis points, 4.78%. The economy, what can we say? I mean, I don't know. I don't know if I harp on it enough. I feel like I do. I feel like this is where I get stuck every week, finding that I need to over-explain things. But this is, you don't get to headlines till you get through this. There should be like a thing. You should have some sort of thing where if they try to fast forward through why everything's so good, they don't get to listen to the headlines. Headlines don't matter to you. The fancy stuff that Amazon's doing, I don't think that should resonate with you unless you're able to actually sit back and bask in the opportunities you have because of where you live and the time you live and how great things are doing. These companies are excelling because of how the economies, not in the other way around. They're benefiting from the fact that there's a lot of money to go around. Technology is bustling and things are all happening for, people like you and I sitting in Canada, or our listeners, Canada, the United States, happening in the right place at the right time for us to benefit from it. So it's really difficult for, the economy seems to be the thing. To me, that's the jazz, man. That's where it's at. I don't, the headlines are great, but I'm not trading on the news because I know all that stuff's priced in. But every week when you reaffirm how good the economy's doing and how good the global economy's doing, despite trade war, nonsense, unrest, that people make more of a deal of than it really is, it really reaffirms that the idea that there's not companies that are still going to the moon is nonsense, because things are too good.
Way too good.
They're way too good.
Yeah.
So we'll see. What we'll continue to see as we see giant IPOs continue to coming
out.
Yeah, major mergers. There is a lot of companies doing a lot of stuff with big money.
There's a couple on the go right now.
There's a couple on the go.
Yeah. Let's move on to headlines. What's going on with Walmart and this? Is it
Flipkart?
Flipkart,
Okay,
yes.
so Walmart last week got into some stuff. Do you know about this? So Walmart over in the United Kingdom has a grocery chain, much like the Walmart's, called Asda, the ASDA. They paired up with Sainsbury. So Sainsbury and Asda are now the UK's biggest grocer over there, bigger than Tesco, which was the biggest before. Now, rumors are that actually Amazon was trying to buy Waitrose earlier this year, late in 2017. So the UK grocery sector is getting very, very hectic as Walmart, one of their subsidiaries, Asda, and Sainsbury get together and are bigger than Tesco now, which is huge. Tesco's that was the only grocer name I knew over there once I started looking into the story, was Tesco.
Yeah, me too.
Because they're massive over there. Walmart now bigger than them over there as they pair up with Sainsbury, but that's not the only thing. So they went into India. So India has a company that's one of the biggest e-commerce retailers in the world. Because, India's market, obviously.
That's Flipkart.
Not 2 or 3 people over there, right? Over 1 billion people in India.
For sure, yeah.
So Flipkart's massive. They're not as big as Amazon, but they're really big. SoftBank, which owns T-Mobile, right?
Sprint.
Yeah, SoftBank, but they're in everything, obviously, own 21% of this. They're selling their entire share over to Walmart. Walmart's buying 77% stake in total for $16 billion, which basically puts the e-commerce giant Flipkart, what about 21 billion valuation? It's a pretty strong valuation.
That's pretty big.
IPO apparently about 4 years from now, Walmart's saying that could potentially, that's what was with the
2022,
SEC.
yes.
What's in the SEC filings, that's what they're kind of looking at. And when you talk about the SoftBank investment, that's only last August. So SoftBank's wondering, what kind of taxing they're going to have to pay for getting into an investment this large, $2.5 billion last August, and getting out of it so soon, not even a fiscal year later. Apparently about $4 billion is what they're going to make on this deal. So pretty good investment since August to now, $1.5 billion in some gross there.
Yeah.
But the Flipkart deal is also apparently going to get Alphabet as an investor. We're hearing.
Yeah, we heard that.
They might get in on the next round of investing because obviously Flipkart hasn't gone public yet. So you could get in and do a little investing yourself and help build up some strength in the Flipkart brand with Alphabet getting in. That would allow Alphabet to get into the marketplace kind of in competition with Amazon, indirectly by buying into a company like Flipkart. And not only that, but Flipkart right now uses Microsoft's Azure or Azure, or however you say it.
Azure,
yeah, whatever the cloud system is over there. And obviously that would help lure Flipkart over to Google's cloud-based platform. Right? If Google was the investor, Alphabet was the investor,
right,
you're going to see Flipkart off, and they're doing quite a bit of business, obviously being one of the biggest e-commerce companies in the world. So Walmart buying into that, Google potentially, Alphabet potentially getting into that, causing Microsoft to lose one of their cloud companies that does exclusive work with Microsoft. I mean, you got to think that would potentially happen down the road.
Yeah, that might hinder the deal between those two, right?
Yeah, you would think it would move. They'd move over to Google, right, and use Google.
Yeah, you would think that it would go over
if they were one of the investors.
Whatever,
why would they not, right? So that's a big deal. Walmart, 2 big deals, 2 weeks back to back, as consolidation in a lot of marketplaces continue to take place, but shots fired. Like Amazon now, right? Like that's directly shots fired at Amazon.
That is. Yeah.
That's not anybody else. That's Walmart saying like retail space isn't just your space. We're not going to just be brick and mortar. We're not just going to worry about Walmart.com. We're going to go out internationally and we're going to get one of your main international competitors and we're going to get that under our umbrella. And, Amazon's not in the Indian market as big as Flipkart is. So, I mean, now you're seeing Walmart's, that's Amazon directly. And Amazon's, I mean, they're due for a move. We've been hearing Amazon buying Target. We've been hearing
medical stuff.
Amazon could have bought 50 things by now.
That's very true.
It might lead to something. We're hearing, like I said, that earlier this year, Waitrose, a grocer over in the UK, they were apparently trying to buy. Amazon, we hear all the time, is trying to buy someone.
Amazon's buying everybody something.
Trying
to buy everybody.
I heard Microsoft might be buying Netflix. That's what an analyst came out and said earlier this week. Microsoft could potentially be looking into Netflix as a way to get into the original content and streaming stuff without really having to do a whole lot of startup business themselves. They just come in, dump a whole lot of cash into Netflix, and all of a sudden being a major player. Yeah. The biggest player. They would all automatically be the biggest player, would they not? Netflix.
Oh, for sure.
Netflix is definitely the biggest player.
Yeah,
so they would automatically be that. Yeah, I heard that too. So I mean, consolidation continues to take place as a lot of these companies spread out into so many different. I mean, we're going to come to a point in time where there's going to be 30 companies that are in every sector. They just have
for sure,
just major conglomerates.
Just trickle down to everything.
They just are in everything, and everybody's a subsidiary of 12 different companies.
Right.
We're going into that.
There could only be one, right?
Yeah, like Highlander, basically. The regulators won't let that happen.
No, of course not.
Regulators love stifling stuff.
They do, don't they? Huh?
Nestle purchased that Starbucks packaged goods business that we were talking about, the rights. We were saying, what was it, $3 billion last week? Turned out to be $7.15 billion. Nestle's the largest food company in the United States by units sold, and Starbucks has a very minimal international presence. And when you're talking about Nestle, they have a major global presence. They're going to be able to get that Starbucks packaged good, which is going to remain saying Starbucks on it, to a lot more viewing eyes, a lot more hands, and into a lot more kitchens. That's going to pay off probably for both brands in the long run. Obviously, Starbucks taking the $7.15 billion in licensing fees and pocketing that as traffic hasn't been up to par at the Starbucks brand in recent years. It's probably time to try to find a way to re-stimulate Starbucks as an actual outlet, as opposed to worrying about some of the stuff like this that was probably better handled by Nestle, Who was handling it before this? Mondelez, right?
Yeah, Mondelez was.
Monsanto's CEO, you know Monsanto, they're pairing up with
do.
Bayer. Bayer obviously selling off some key assets to BASF to get European regulators to greenlight this Monsanto deal. The CEO, Hugh Grant, not the guy who likes hookers, CEO of Monsanto since 2003.
They're not the same guy?
Not the same guy.
Right.
This guy might like hookers,
Right.
but the other guy, the other Hugh Grant, he liked hookers for sure.
For sure.
We confirmed that.
Yes, we
This
did.
one is up in the air. We could ask him. He's stepping down. He might be a little more transparent
Maybe now,
about what he thinks about hookers. So CEO since 2003, been with Monsanto a very long time, stepping down upon the closing of Bayer's acquisition. I'm assuming to go get some hookers.
I'm assuming so.
Right?
Why not?
Elliot Management. They're the largest activist investor hedge fund in the world. They're invested in it's a Wikipedia list.
Yeah, we went through the list. They're a little bit of everything.
Yeah, they're in a little bit of everything, right? So they made $160 a share bid for Athena Health. That's a data company in the healthcare field.
Yes, it is.
Yeah, they collect and share all the data between hospitals and doctors and tablets and
like mobile apps and stuff like that.
All the pertinent information about you and what's going on with you and your health and all other health and data and synchronizing all that kind of stuff, because I imagine you're seeing physicians all over the world.
Especially when you travel, right?
Things become very difficult, and you want things to be much more organized. Athena Health doing that, $160 a share bid from Elliot Management. That's a 27% premium on the stock price at the time of this proposal on Monday. Elliot Management currently owns 8.9% of the common stock already. Will this go through? We've seen a lot of consolidation in healthcare. Elliot Management coming into potentially decide to flip this 5 years from now to Amazon, to Microsoft, to Alphabet, to one of the companies that's going to be in this data field, right? Facebook is going to be. Facebook's already a data collector. Right? Why is Facebook just not going to be in this medical, as they need to branch out and build revenues? There's no more monetization of people going on the platform just looking at pictures of their mom.
Right, yeah.
You were saying there's going to be this consolidation of 12, 15, 20 companies. Is that what Elliot Management's doing? Are they just paying the premium now, knowing that maybe in 5 years they're going to be able to flip this for another 50%? When all the music, when the music stops, and the chairs are all gone, and one of the big boys, Amazon, Microsoft, Alphabet, one of the big boys are looking around going, we didn't get one of these.
Yeah.
Everybody else got one of these. Everybody got an insurer. Everybody got a piece, everybody got a piece of something that they're trying to diversify into. Oh, I didn't get one of these. That's where Elliot Management comes out and goes like, oh, well, by the way, we happen to have Athena Health still here. You guys do a lot of stuff with data.
I'm pretty sure they know how to hedge their bets, and they probably
largest activist hedge fund in the world, probably. I would imagine.
That's right. They are the largest activist hedge funds in the world.
I would imagine they're looking at the future, seeing the consolidation, thinking, why not get some chips off the table now and come back in 10 years and cash
I'm pretty sure they got a game plan 10, 20 years down the road, what they expect.
That would be my game plan. If I'm looking at this and I've got the money and I can do this.
When you're the largest.
You're not going to have any issue with regulators picking this up. You're going to have more issue with regulators unloading it because of who you're going to probably try to unload it to, which is going to be one of the big boys. But right now, picking it up, you're not going to have any regulator issues as long as everything is on the up and up and you've got the cash, or you can come up with the debt facility or whatever. You're going to end up picking this up, and you might be able to flip this. Consolidation is taking place. I mean, we're seeing that. Don't be coughing during my podcast. I'm trying to talk here about Athena Health.
I know you are.
Elliot Management, sir. That's the largest activist hedge fund in the world. You're just coughing away.
I got scared for a minute there.
Pretty uncouth, man.
Apologize.
Pull it together. Pull it together.
I will.
Moving right along. Speaking of sectors that aren't doing as well this year as they were doing in 2017, if you cough again.
I'm not going to cough.
Semiconductors in China. China is trying to become the world leader in technology. That's a part of their plan. It's a part of the China 2025 plan or whatever.
Really?
Yeah,
Okay.
they have a total government plan. I mean, we know the government's involved subsidizing a lot of major companies and industries over in China. China's finalizing $47.4 billion in an investment fund to grow their tech industry. That's mainly in the semiconductor industry. by financing semiconductor research, startup development. The government-backed China Integrated Circuit Industry Investment Fund will manage the financing. China had a similar fund as they were first getting into the tech industry on the major scale. And we've seen some of the countries or companies that have come out of China on the tech scale. Xiaomi, Hawaii, a lot of the big cell phone providers out there coming out of China right now. Two of the five major ones out there for sure coming out of China. They started a similar fund 2014 for $21.8 billion. A lot of major companies coming out of China. China continues to feed into their economy. I don't know. When I look at this, I think that this is exactly what you're supposed to be doing, right? Like, I don't like that the government is so involved that we're not 100% sure if the government's on the up and up yet. But when you when you look at a country that has the GDP that China has at 6+%, what do you?
It shows that they kind of know what they're doing.
The country's growing at such an exponential rate. Like, they're going to be
when you
bigger.
Look at the numbers,
going to be bigger than the United States in very, very short order. They're driving industry. They're very smart. They understand that they need to put back into their own economy, and they need to invest that money to make sure that industry that's taking off right now and will be the industry that is the leader, if it isn't already, 10, 15 years from now. And is there anything other than technology? Technology's in everything. Technology is eventually going to be inside of us. Nanotechnology will be inside every cell in your body. Inside the mitochondria, manipulating your DNA, changing you from within. Well, I mean, that's probably where we're headed.
Yeah.
So the idea,
I think a lot of people might be scared of that, though.
Why? Skynet?
Injecting little robots in your body that's gonna do stuff to you.
I'm
all for it.
Yeah,
but I can see a lot of people going against the grain there.
But that's probably where we're headed, whether you like it or not.
Oh, very true, yeah.
Right?
Yeah.
So where would you invest your money if you were a country and you were looking to make sure you prosper, not this generation, but next?
About a couple generations down the road.
You look to technology because technology is clearly not slowing down by any stretch. And technology encompasses everything from autonomous vehicles and all the way down to pharmaceuticals.
Technology brought us here from the edge of time. Technology's changed. Now it's just circuits, right?
Speaking of technology,
okay.
Comcast. They're doing a lot of broadcasting through a technological medium of sorts. They're really trying to consolidate as well, as they notice that Disney and AT&T, Time Warner, and a bunch of other companies are ramping up their consolidation efforts, trying to get as much media under one umbrella as they can. Comcast having none of it, as Disney's made a proposal to buy, is it 21st Century Fox? 21st Century Fox for $52.4 billion. Well, Comcast has an all-cash offer that they're trying to finance right now.
A huge one.
For $60 billion that they're planning on offering in June. They've added a $2.5 billion breakup fee to this offer that's going to be proposed. That puts obviously the Disney and 21st Century Fox deal in a bit of limbo right now, as we see if Disney ups the bid or if Comcast, and I know Comcast over in the United Kingdom making their bid for Sky TV formal by notifying the European Commission. They're competing over there with Fox and possibly Disney for the British pay TV group. Comcast is all over the place as media. Is media that big a deal?
I think so. Whoever controls media controls the world, really.
Yeah, you think? Do you think there's not enough outlets for media nowadays between, like, you can make your own content,
for sure.
Roku, YouTube.
I think it's more the IPs that are involved in this deal that they want.
Yeah, it is. It really is, isn't it? It's a lot of just having the ability to set up a streaming service and have 500 brands people already
Exactly.
know.
You got a big library of movies, of shows, all that
really
stuff.
is.
And if you are a service provider like that, that's kind of something that you want in your back pocket.
Absolutely. While the actual TV, like, subscription industry, the actual ability to, assume that you're going to dominate cable again or anything like that is a foolish notion.
Those are really high hopes.
Holding the brands can be very, very valuable because you can use those in
money in the bank.
Whatever medium happens to be the next step. And it's a lot easier to dust off and spit shine an old brand that everybody loves than it is to endear people to a new brand.
That's very true.
No doubt about
Personally,
that.
I hope Disney gets this deal that goes through. I think they will do the brand names justice for the IPs that they're
I would imagine.
gonna get.
Yeah, I would imagine so. I would think that people want to see all the Marvel stuff consolidated under
Isn't
one
that
roof.
one thing? Yeah, for sure.
Yeah, everybody wants to see
good
that.
X-Men movies would be nice.
I was going to talk about Comcast again here. Tesla, speaking of a company that's got a lot of convoluted stuff going on in many different avenues,
yes.
we're dealing with the blowback from 2 weeks ago, conference call on the earnings call where Elon Musk basically told a bunch of analysts they were boring and they had some boneheaded questions, and that he was taking it to the YouTube questions that were a lot more favorable. He was sick of answering a lot of questions about delivery promises and what their cash situation and debt situation are. So we're hearing they're using the Fremont facility as some credit backing out there, that they also could be using potential IP, logo, all that kind of stuff, the actual patents for vehicles, as also retaining a little bit of credit if they need it in the future. Right now, the Fremont facility where the Model 3 is being made is being used because Tesla needs a whole lot of, they need the opportunity to raise money if they need it. They're burning thousands a minute.
They are.
Thousands a minute in cash. Tesla has a lot of work ahead of them. They're the most shorted stock on the Russell 3000. 31.25% of the free float of Tesla shorted. Musk bought just under $10 million of stock last week, just trying to shore up, I think, investors. It's the first time he's bought stock in a year and a half almost.
Okay,
But I think just trying to shore up investors and say, like, I still believe in this. Like I was saying to you during the earnings call, if you don't like a little bit of turbulence, don't buy this stock, because this stock has a lot of growing still to do. But if you're here to grow with us, if you believe in what we're doing, I mean,
I guess you're not an established car manufacturer such as like a GM or Ford or whatever, so I can see how it's a little turbulence at the beginning, because this is kind of like a new technology that they're kind of
so much. But I mean, guys are leaving. Engineering chief Doug Field is taking a leave of absence. He's the guy who designed the Model 3.
Yes,
So, I mean,
yeah, that's right. He did leave.
That's a major departure, because who knows how long, if forever, this leave of absence.
Somebody else just left too, didn't they?
Yeah, Matthew Shawal, the director of field engineering, he's leaving. He's going to Waymo over at Google.
That's right. Yeah.
Yeah. So I mean, guys are leaving. Orders for the Model 3, all-wheel and performance models open up next week. So they can't fulfill orders right now for the regular Model 3, but they're taking more orders for the all-wheel drive version and the performance version. Apparently an air suspension version of the Model 3 is going to be available next year. Are they going to be able to get any of these up to the production levels that they're promising people? We're expecting to see production levels up in June or July, up to 5,000 a week.
Oh yeah,
yeah, and we're expecting to see them not need any kind of inflows of capital whatsoever, right? They're going to be cash positive, they're saying, for quarter 3 and quarter 4.
1 or 2 months
away,
right?
Let's see it, right? Are they going to be cash positive because they're taking deposits on a bunch of cars that they're never going to be able to produce? Is that why they're pumping up? We'll see. We'll see, right? Yeah. Apparently, over at, is it SpaceX? It could be the Falcon 9 Block 5 rocket to fly 10 times it can launch before it needs maintenance, potentially, compared to right now when everyone needs maintenance or it's destroyed at the end of it. That's going to take orbital launches from $50 million a piece, if this actually pans out, down to $5 million a piece. Significant decrease in price. A lot more adventure potential in space, because everyone loves the intrigue of Captain Kirk falling in love with a space princess from the planet Nebulon, and that really tickles my fancy. I want that to happen to me. I want to live a space adventure.
Rocket Man.
Yeah, rocket romance. Yeah, that sounds fantastic. So, Tesla, Elon Musk, is he spread too thin? I personally think he probably is. Do other people think so? The affinity for the company, I think, remains really strong. It's one of those things where I actually believe him on the earnings call when he says, if you don't like the potential to lose money, basically, I wouldn't ride with this stock. But if you like the fact that we're moving towards something where the vision is very big.
It could be world changing.
It could be, right? So you really got to pick the hill you want to die on.
Yeah.
It's one of those companies.
Might just have to be an investment stock, like a fun investment. Just be like, I know this thing's gonna not probably do so good, but I want to be kind of invested in it still.
Sorry to break it to you, but in real life, when things teeter on the brink like this, it's people that have balls are the ones that make money. So I mean, a lot of times it really takes having a parent saying like, I'm gonna make this decision or I'm not, and being definitive about it for a reason. If you sit on the fence with a company like this, it's not gonna do you. You're not gonna learn anything from watching it, because it literally is a leap of faith if you're in it or not.
Well, the bigger the risk, the greater reward.
Exactly,
right?
And this is, like you said, probably a lot more safely allocated to being fun money.
Yes, where you already know if it fails, and you're not too worried about it.
Yeah, you're playing it because your heart's in it, not because you can really take anything from these numbers and say, oh yeah,
it's going up.
I see how it's going to change and justify everything that's already priced in, which is a lot. There was a fire at Ford. Not really at Ford, like not at the house. Henry Ford.
Oh, you scared me there for a second. Oh.
But there was a fire at Meridian Lightweight Technologies. That's a Chinese-owned company, but they run out of Michigan. Now, do you want to know what they do?
Of course I do.
You do?
I do.
So they make the interiors for the Ford F-150s and the Ford Super Duties. And their factory burned to the ground, like to the absolute ground. Ford basically had to put a pause on their F-150 factory in Dearborn, Michigan, in Kansas City, their Super Duty factory in Kentucky, but not the one in Ohio, as materials ran out to do the interiors on the Ford F-150s and Ford Super Duties. So they've got 76 days worth. It takes 76 days to sell a Ford F-150 on average. So they have a backlog of 76 days.
Okay.
But when the vehicle that makes a quarter of your company's entire sales has to stop production.
Oh, yeah, that's right. Yeah.
Complete production halt. People start to get a little concerned. So Ford's obviously hoping that they can get this back up and running, and they don't want to be obviously taking in product from a separate supplier and risking quality.
Well, no, exactly.
How long does it take to get this back up and back to shape? Like, obviously, if they've had to shut down all these plants, they didn't have a plan B. If so facto,
no.
The company that made your interiors burned to the ground, especially the interiors of the #1 selling truck in the world, year over year.
They obviously didn't take this into account of what could happen.
So that's pretty big news, and a lot of people are sitting idle out of work right now. They'll be back at work shortly as they figure this out. But
they got 76 days. I'm pretty sure they can turn it around.
Yeah. They'll figure it out at Ford. But there's a lot of people out of work right now, sitting where there's no trucks being made.
Plants are closed.
Absolutely. AT&T and Novartis both paid Donald Trump's lawyer Michael Cohen some money that I think they're allowed to pay him if they want. I mean, they probably have to answer their shareholders. But the FBI doesn't like it. See, the FBI doesn't like Donald Trump. They've got a lot out for Trump. They basically ransacked his lawyer's office. The lawyer that has an office of 4 employees that only manages the corporate affairs and personal affairs of President Donald Trump, and who isn't really liked by a lot of the acting people in control of the FBI, was raided a few weeks ago. In what's about the most unjust raid I don't think anybody's ever seen ever. Like it was really for no reason. They just walked in there and took all the information. They basically took all of Trump's information as well, and have been accused by a federal judge in another case with the same guys in a very similar vein in regards to Donald Trump, saying that the federal judge said right to the director of the FBI that he thinks they were doing this exclusively for other reasons, not the tax reasons they arrested the one guy for, but to see if there was any collusion between the Donald Trump party and Russia, and they were using this as like a thinly veiled way to get that information. Again, with Michael Cohen, they're saying the same thing. They're seeing if there was any kind of tax situations in regards to some money exchanging hands. But they were saying they also were probably using it as a way to go in and then steal, millions of pages of personal Trump documents, because he's only the lawyer for Donald Trump. So We did find out this week that AT&T paid Michael Cohen $600,000 and Novartis paid him $1.2 million as ways to get some information from him, for him to be a, maybe not a liaison, but definitely someone who could give advice to these companies as to the incoming administration's opinions on a lot of things that AT&T and Novartis apparently were going to attempt or were planning on. I'm not sure if other companies that maybe did the same thing just haven't been unveiled yet, and we haven't really seen the full breadth of this. I really don't, outside of the shareholders maybe having a concern, but this is a way to invest. I mean, when there's a new government coming into power, and you take a look at the pharmaceutical company, we find out Novartis gave him $1.2 million to try to find out what kind of Trump's philosophies were on a lot of things. And you look last week, Trump's got a problem with the pharmaceutical industry.
He does.
Might have paid off a little bit to know in advance that there was really going to be, come hell or high water, some actual action in regards to your sector, right? So I don't see it as being a poor guided investment on behalf of these companies. And
it's probably a good foresight of what your company could expect.
There's a million lobbyists and stuff out there, making deals and getting information. I don't see what's any different just because the guy's Trump's lawyer, other than people are just looking for Trump to be the bad guy in a lot of scenarios.
I think that's just what they're trying to do.
Absolutely. Uber Air. Would you like to fly in an airplane from some random guy that shows up at your house in an airplane that doesn't look like it's been serviced maybe in the last 10 years?
Well, of course
I do. Like how
Uber
car works, right? Like Uber apparently, I don't know how they're going to work this. It's obviously not just going to be any random guy who says he's a commercial pilot. They're seeking a third launch city. They've got Dallas, Los Angeles. They're seeking an international city after Dubai pulled out. They're trying to launch Uber Air. So demo date 2020, commercial flights in 2023.
So anybody can just hire.
I think I'll just be flying a plane on the weekends from now on. I think I'm just gonna, I already drive a truck. What's the difference? It's just a plane.
That's right.
I could land that by 2023. Think of the technology. If China makes a few more $40+ billion investments in semiconductors between then, I'll be flying an autonomous plane, feet up, drinking a margarita, landing in Dubai or wherever we pick internationally when me and Uber Air make our decision. And I'll, be flying a commercial jet, no problem.
No problem.
Huh? Yeah, on the weekends.
On the weekends.
Yeah, just for a little extra cash.
So does this plane just pick you up at your house? Or
I don't know. I would imagine you depart from an airport mainly because, like, when we look out here into my my front street, it just doesn't look like it's got the taxiing ability for a plane the size.
Maybe they just like dangle a rope with a hook. You hold up a piece of metal, like scoops you up, and then reel you up.
Maybe it's something.
Or you go to the airport. That's
probably the 2020 demo thing.
That's right.
They're going to try a couple different ways of picking people up, right?
Yeah.
They're probably going to really, if they're doing this demo, I imagine they're probably going to demo out the idea of having just random people be the pilot.
For sure.
Much like they do with the driver aspect.
I think that they're going to have to hire pilots. I don't think it's just going to be random.
So as they work towards an IPO here, because we've been hearing about it, and they have nothing but regulatory issues around the world. Is this the right way to go? We're going into an air idea. Is that? I mean, air travel's not going away, right?
Oh, it's definitely not.
I mean, they're definitely a company that's known for their. Is that a good mix? They
already have a bad reputation as it is.
All in one, right? All in one travel for a lot of cities where people maybe don't have a vehicle. Tokyo. Hong Kong, all over Hong Kong, Singapore, right? Like New York. This could be an all-in-one. You're coming into a major metropolis.
Right.
You take the cab that's the Uber to the Uber plane, the plane to the location to the new Uber cab. And you have this complete cycle of.
We're gonna have to have a lot of destinations.
Are they gonna get into hotels next? Is it all gonna be one big? Hotels. Yeah, it's all gonna be one big.
Some sketchy doorman.
one big ecosystem of how people travel. Because right now, what other cab company owns an airplane company, right? And planning on doing commercialized flights. I mean, it seems like that's kind of what they're trying to do. Is they're trying to get that full cycle of people, not just at the airport or not just going to the airport, but going to and at the airport. So, what would be the other destination for them? The other destination would be that starting point and landing point, right? Well, you're going to start and land somewhere. It's not both going to be at home. One of it's going to be some destination. If it ain't Disneyland, it's going to be a hotel downtown New York while you're there on business. That could be a whole Uber package, much like we're talking about Lyft that has a subscription plan. Did you know that? So much like Uber potentially having the full ecosystem deal one day, Lyft has a subscription plan to make you use the Lyft service a lot more. $200 a month gives you $15 off up to 30 rides. I don't know if it's a month or a year. I don't know if it redoes every year. It didn't say in the actual thing. I know they're rolling it out across the nation. It's in a lot of major cities right now. But any ride up to $15 and it's free because you get 30 rides with $15 off. So if you take a Lyft and it's $14, that's just a free ride.
That's right.
And if you take one that's $20, you pay $5.
That's not too
It's
bad.
a really good deal, right? So it's a smart idea for a lot of, again, cities where people are taking cabs very, very frequently, or a lot of people just don't want to own a car. It's a lot more overhead. If you could just call, maybe your proximity to your job is very close. You're only taking a vehicle 2-3 times a week. That could be a very good subscription plan.
Could be, yep.
People pay for a lot of other things, data for your phone, right? Cable, all this kind of stuff. That could be a good subscription plan. And a lot of people don't own a car. One of the two of us here. Airbus and Boeing lost a few contracts in this Iran deal, but both of them came out and said, rest assured, our backlogs are full. We are not concerned with this at all. Granted, a few deals came off the board. Backlogs right to the roof. So they both lost deals in the tens of millions of dollars because of this Iran. But I mean,
not shook.
Backlogs at Boeing are what, at 4,000 plus. So it's not a real issue. Xiaomi, one of the largest cell phone makers in the world, out of China, IPO in Hong Kong. We're expecting sooner than later. $70 to $80 billion is the current valuation of the company. They're expecting to launch on the Chinese market a little bit after they launch in Hong Kong. Big cell phone company,
one of the hugest,
like
one of the biggest.
Like ZTE and like Hawaii. We just don't see the stuff over here.
No, we don't. No.
Right? ZTE basically just got banned from
exactly.
everywhere. Yeah. We don't see this stuff. It'd be nice to actually see these phones because they're beautiful.
I have watched a couple reviews on them, and they do look really nice.
Yeah, they're gorgeous.
They're pretty powerful too.
The Hawaii phones, they say they're going to be, by the next iteration, by the next generation of iPhones, Samsung phones, and Hawaii phones, they swear they're going to be the industry leader for best phone. Not just the industry leader for sales, which they're right up there in sales too, because they dominate marketplaces.
Oh, they do.
Right?
Yeah,
so they're all over Eastern Europe. They're all over China. This company's going to go IPO, and for the amount of devices that people have in their hands, to be in the top 3 or 4, you've got a good fighting chance. Like, you could have one of these companies that are an iconic company drop the ball in one generation, and you could move space, something fierce. You talk to Motorola, you talk to Nokia, you talk to all these other companies, Sony. They used to have market share that Hawaii and Xiaomi and ZTE have now. And you can see that you let your eye off the ball really fast. You start falling.
Yeah, considering now that everybody has a device in their hand nowadays.
Absolutely.
Everybody.
It's in your hand constantly. It's running right now.
It is
recording
running
every word I say.
Exactly,
Woo. Capital One is exiting the mortgage business. As we know, they are selling a $17 billion book of business of mortgages to DLJ Mortgage, a subsidiary of Credit Suisse over in Europe. Capital One, focusing on what they do best, which is credit lending. They are getting out of the mortgage business. No more for them. Toshiba is still trying to sell this chip unit. They've had nothing but problems. Western Digital, all sorts of nonsense because of the SanDisk sale. Chip unit sale to Bain Capital and the consortium that's behind the Bain Capital purchase, not likely apparently to be approved by Chinese regulators. This deal's for like $18 billion. Toshiba needed to sell this chip unit to suffice a bunch of debt and stuff, and that's just not taking place. This is becoming a real headache because this has been going on 8+ months now. Costco, comparable store sales up 10.9% in April. U.S. sales up 10.2%. Canada up 14%. International up 11.2%. And the e-commerce business up 43.1%. Caterpillar's 3-month rolling machine sales up 28% year over year. So as we get some statistics out of Costco and Caterpillar, it seems like heavy machinery still selling. Costco, comparable store sales continue to grow. Your favorite company,
my favorite,
your favorite, Verizon, buying back $2.5 billion worth of debt that's due in 2025. They had a little extra cash laying around. There's been some tax cuts. A lot of guys had some EPS bumps, as if I haven't mentioned yet, we're going to get into the end, or almost the end, because we've got Walmart and Macy's and stuff next week. Almost the end of earnings season, which has been the best earnings season for EPS and rev beats in 20 years, and has been the best earnings season for actual revenue growth in, I think, 7 or 8. So it's been a phenomenal earnings quarter, first quarter. So Verizon had a little bit of extra money, buying back some debt not due till 2025. So shout out to some bondholders. Your debt's being bought back. Ant Financial, a subsidiary sort of 33% owned by Alibaba, is doing its last round of financing, looking for another $10 billion, is going to IPO shortly. Couple of years, $150 billion valuation at Ant Financial. This is going to be a massive IPO when it does happen. Who knows how much they put out there publicly, but it's going to be a very, very big IPO when it does happen. Obviously, anything that's a division or an arm of Alibaba as we go forward, a company that's growing at 50% revenue growth 8 quarters in a row, like we talked about last week, is going to be a fairly substantial company. And you got to imagine Ant Financial probably always, all these other companies out of there, have the hand of the Chinese government in there, making sure everything is just right.
Just right.
Why wouldn't they, right?
150 billion though, huh? That's crazy.
150 billion valuation right now. They're not public. They're still financing rounds. Like they're up and running, right? They're not. The doors aren't closed, but they are massive. Alibaba is massive.
Yeah.
Some of the most exponential growth I've ever seen. 50% revenue growth 8 quarters in a row.
They are a force to be reckoned with.
No sign of slowing down. Absolutely.
Anyways, let's move on to some earnings. There's only a few. There's not too many, like you said. Earnings.
We're on the way out.
Let's give us a rundown of it.
Yeah, I threw in a couple of just extras just for the heck of it. Valeant Pharmaceuticals, VRX. Their net income was $312 million. Revenue $2 billion, beat by $50 million, off by 5.2% year over year. Price is $20.85. Product sales down 5.3%. Other revenues down 9.1%. Their Bausch & Lomb brand, which is the important part of this earnings call, down 3%. Branded RX down 6%. U.S. diversified products down 14%. Down across the board. Valeant, not the strongest Canadian pharmaceutical company out there. That's for sure. Bausch & Lomb is one of their divisions, one of their probably most popular divisions. Obviously, people know that name. Yep. They are changing their name to Bausch Health Companies, ticker symbol BHC. So no more Valeant Pharmaceuticals, as maybe they just try to shake the name, as they're not really the strongest in the pharmaceutical business out there. Right. Walt Disney reported earnings, ticker symbol DIS, EPS of $1.84, beat by 14 cents. Revenues of $14.6 billion, beat by $490 million. That number's up 9.4% year over year. They ended the week $102.07. Revenues at the media networks was 3%. Revenues at parks and resorts was 13% growth. Revenues at studio entertainment was up 21%. And the revenues in consumer products and interactive media was up 2%. So revenue growth across the board in all segments. But operating income down 6% in media networks, and also down 4% in consumer products and interactive media, but continuing the trend of absolutely dominating for the Disney brand. Not just studio entertainment, which was up 29% this quarter, but the thing that's really been dominating, if you've been following along with the home game, is parks and resorts for Disney, up 27% in the first quarter for operating income. You can only expect through the summer seasons, these parks and resorts are going to start making some serious cash. Free cash flow over at Disney up 48% to $3.46 billion, as they continue to find a way to operate things at a much cheaper level and find the little extra cash in the cushions. Electronic Arts, that's ticker symbol EA. Their EPS was $1.95 versus $1.16 estimates. There's a couple of tax things in there that make the EPS such a skewed number. Revenues of $1.58 billion, beat by $350 million. That number's up 3.3% year over year. And the price is $132.81 to end the week. Digital net bookings, or sales on the internet, up 17% to $3.5 billion. Net income $607 million versus $566 million the previous quarter. Electronic Arts, would you say they're the best? Probably not in the video game sector. they're
I'm more
there.
of a Rockstar Bethesda kind of
Yeah,
guy, I think.
I'm definitely leaning more towards Activision Blizzard. Just if
Yeah.
we're picking and choosing.
Yes.
For the future, Activision Blizzard seems to be the company that's going to move into esports and really take that off to a level that's probably not even fathomable at this point, I think. I seen somebody earlier this week, a very well respected former Facebook originator, hedge fund manager, whatever, investor, owner, whatever you want to call him, owner of the Golden State Warriors. And he said that he doesn't see anything taking over for sports. He says sports brings people together. And I thought, sports has so many injuries that you could simulate sports in a virtual reality setting through an esports medium. And it seems like things like actual sports, because then you could do things that are not even fathomable. You could play Quidditch like in Harry Potter.
Right, sure.
When you're doing virtual reality, it makes almost the idea of real sports seem kind of passé a little bit. Because now you don't have to worry about all these things like injuries or
concussions
or
like that,
weather or contract disputes or things could be very easily done through a virtual world. So when he says that the things that bring us together, sports is one of them. I don't know, man. I think anything that people can jive over, I think is going to be what brings them together.
Whatever the masses can follow. Yeah. Video games is one of the things that the masses can follow, especially the ones this generation.
The way it's starting to look is like you're watching live something anyways.
Well, they say the next couple console cycles is you're not going to be able to picture what's reality and what's not reality.
Sounds like it's going to be pretty tough for people to sell someone on going to a sporting event for $500 a ticket when you could see any...
Your favorite player is already there, that you can choose whatever team they play
exactly. on. Just saying. Monster, which, their revenues are up because of how many we drank. Ticker symbol MNST, EPS 38 cents. Missed by a penny, revenues of $850.9 million, beat by $3.9 million. I'm going to assume that $3.9 million beat was what I was doing. That number's up 14.7% year over year, 49.27 to close out the week. Monster, you are welcome. Sysco, the trucking company, SYY, 67 cents, beat by 3 cents, 14.35 billion. They're in line. 6.1% revenue growth year over year, 62.82 to close the week. Sysco transporting food all across everywhere. Sysco's here in Edmonton. They're all over the place.
They are, yes.
Sales of 4.9% growth in Q3. That was Q3 for them, not Q1. They're doing a whole different fiscal taxing thing. International food services up 10.7% to $2.8 billion. U.S. food service sales up 5.1% to $9.7 billion. Total case volume up 2.4%. In the conference call, the CEO mentioned good results despite ongoing cost challenges. What could be the ongoing cost challenges? Probably the fuel price.
Fuel, repairs.
He didn't. Fuel's up, right? Over $70 a barrel. Ongoing cost challenges. He wasn't any more descriptive. It's got to be the price of fuel. Sysco running a tight ship. Obviously, the biggest food distributor in North America. Anheuser Busch InBev. Bud is your ticker symbol, 73 cents, missed by 7 cents, $13.07 billion, beat by $140 million. That number only up 1.2% year over year as volumes continue to decline with the Budweiser and Bud Light brands. They're losing market share, but despite a $95.06 closing price, Budweiser thinks this summer is going to be the summer, because they're really well hooked up with the World Cup. And where their volumes are growing the best is in Brazil, Mexico, Colombia, and Argentina, all major soccer-driven countries that are going to be invested in watching the World Cup. Budweiser paired with the World Cup and growing their biggest volumes in those World Cup-centric countries. You could see Budweiser having quite a bit of market share growth that they
smart move.
Could have been a good move, right?
That's right.
As Budweiser and Bud Light continue to lose a bit of market share. Roku missed by, they're 7 cents in the negative is what their EPS was. They beat by 8. They were expected to be negative 15 cents. -7 cents.
Not too bad, I guess.
Revenues of 136.6 million, beat by 9.45 million. Now the revs up 36.5% year over year. Active accounts up 47% to 20.8 million. Streaming hours up 56% to 5.1 billion hours. Average revenue per account, that's the money they're making per account, up 50% to $15.07. Roku's been one of those stocks that ran really hard and fast at the end of last year, early this year, off of a couple of good quarter beats. It continues to look good. They got to get that EPS obviously into the green, but they're a growing company. They're probably primed to be taken over by somebody a lot more than they're primed to be successful on their own. I know the platform is selling at a much slower clip than they're actually making money at the subscription side. They're making a lot more money off that than they are off platforms. Platform's almost flat, so not a whole lot more people actually buying the Roku platform. Enbridge, a company that we've covered pretty extensively on this channel, ENB ticker symbol, EPS of 82 cents, beat by 18 cents, price of $33.76. Their mainline volume is up. They've raised $3.1 billion in hybrid equity and refinanced $2.3 billion in debt. Now we know they're restructuring a lot of debt. They've got $61 billion in debt. So they disagree with a judge in Minnesota about the Line 3 pipeline that's being built on the route that the judge says that he thinks they should build on. They're going to go against the judge, and they're going to use that as their proposal instead. They think they're doing a better job of bypassing some native grounds that people don't want to be. But the way the judge had it, they just didn't think that was the right thing. That's a $7.5 billion line replacement project that they're working on in Minnesota, that Line 3 project. So obviously getting that right and getting that passed is vital for Enbridge. They sold U.S. gas pipeline business and part of their renewable energy business this week for $2.5 billion as we continue to do some debt restructuring. Canadian midstream assets that they've got for sale had a bid deadline of this week. They were looking to get about $4.5 billion. It looks like they got bids from Husky, Pembina Pipeline, and Keyera. So those are all preliminary bids. So Enbridge, a company that's the biggest pipeline company in all of North America, when we're hearing about pipelines being backlogged coming out of the Permian Basin and stuff, Enbridge is one of those midstream companies that I think is a really strong company. 33, I was looking at it at 30 a couple of weeks ago. They're going to get these assets sold. They're going to clean up a lot of this debt. A lot of this short-term stuff is going to be out of the way pretty quickly. And as we continue to pick up production across North America, they are the biggest pipeline company that's going on. Earnings continue to come out of Canada as Magna International, that makes a lot of car parts, aftermarket car parts. They're really worried about this NAFTA agreement. Their CEO was on BNN, which is a Bloomberg station up here in Canada now. He was on BNN earlier Friday and was talking about the NAFTA deal and how they really need to sort this out for the business. So EPS of $1.48, beat by 15 cents. Revenues of $10.79 billion, beat by $740 million. That number up 21.2% year over year. Sales at Magna International up in the quarter 14%. Telus, ticker symbol TU. Earnings per share of 73 cents. That missed by 3 cents. Revenues of $3.37 billion, beat by 10 million, and revenues are up 6% year over year. Operating expenses, though, up 8.2%. That is not a good sign, especially when net income is down 2.4%. 76,000 new postpaid ads across internet, wireless, and cable. Obviously, cable, the laggard, getting about 6,000 of that 76,000. The other two being split about equal. Cable is obviously the dying business, as Telus. They need to worry about fixing that EPS number missing on there. And the operating expenses up 8.2% is not a good sign either. Nvidia, the company of the future, one of my favorite companies. They are making some of the biggest moves in all of the marketplaces that you want to be in. If you're talking about the future, we're talking cryptocurrency, they're in it. We're talking about autonomous vehicles, they're in it. We're talking about AI, these guys are in it. They're on the front lines of all the good stuff. There was a time 5 years ago where this was a small little company. These guys are massive, and they are on the absolute precipice of becoming a dominant force in the world, where people are going to reference them in accordance with a company like Intel and it's only a matter of time when the stuff Nvidia is doing. $2.05, beat by 39 cents. Revenues of $3.21 billion, beat by 310 million. That revenue number up 65.5% year over year. Crypto demand was stronger than expected in quarter one, but they expect crypto demand to be down to about a third of that in Q2 as people stop doing as much mining, but that's okay. They've changed gears to all the stuff they've been focused on from before. GPUs up 77%, the Tegra processor up 33%, gaming up 68%, professional visualization up 22%, the data center business, which is their big one that a lot of people don't realize, up 71%, OEM and IP, which is where that crypto business is, up 148%. Automotive, autonomous vehicles, they're working on it. They're on the front lines like we're talking about. They're making a lot of these processors and the microchips that are going to go into these autonomous vehicles in the very first generation. So somebody's going to come out the winner, and Nvidia is absolutely being super aggressive in that. Automotive's up 4%. I got nothing. If you want to know companies, I'm just saying you want to just look at something that's just a winner. You're looking at a winner.
Nvidia.
You're looking at one, right? Like they're doing everything right. It's going to take fuselage falling out of the sky for these guys.
Well, let's hope not that. That's
not going to happen. Finally, the last earnings call is the first earnings call for this company as Dropbox, a newly IPO'd company, reports their first quarterly earnings of all time. Pretty good. DBX is the ticker symbol. 8 cents EPS, beat by 6. Expected to be 2.8. That's not bad.
No.
Quadrupled up on that. Revenue of $316.3 million. Beat by 7.6 million. Revenues up 27.6% year over year. Paying users 11.5 million only up 2.2 million year over year. Need to get some more. Users. That's my only concern with Dropbox is 11.5 million. Where is the? At what point in time do you cap out on the amount of people in the free world that actually need the service that Dropbox offers?
That's right.
Most people just try to consolidate their data as best they can through external hard drives, but in a time and a place that's changing, maybe you're going to find that all that cumbersome equipment might be a lot more daunting than just letting it all go into the big data center in the sky.
That is true, yeah.
Dropbox might know exactly what they're doing. 11.2 million subscribers could turn into 111 million subscribers in a year. We've seen it before.
Yep.
I'm done talking about this. How was it for you? Was it good?
It was good for me.
Was it good for you?
Was it good for you?
Yeah, you can see it in my eyes. I had fun again.
Again, like always.
You think we can do this again next weekend? Make this a trifecta of no hospital visits? Or, better yet, let's do this son of a bitch live from a hospital.
Let's do it.
Why not?
Yeah,
I had a good time. You had a good time.
Of course,
earnings season is over. We're hoping that there's some good headlines, a lot of consolidation in some marketplaces. Wal-Mart buys Flipkart. Tesla makes a lot of big promises again. As Elon Musk buys $10 million worth of shares back. Economy's doing good. Trump's going after prescription drugs.
That's right.
Trump's going Trump
Trump's going after everybody.
Trump just threw Iran by the waist-side. He didn't even go after them. He just tossed them aside.
That's right.
Call yourself an Uber and get out
of here. Drop the mic.
Yeah. So that was that. I'll see you next week.
Next week.
See you guys next week. Check you later.